And I think a really easy way to think about this is let's go to a market where there isn't like most of the Western world has seen declining homeownership rates, right? So Canada, the US, homeownership rates have been falling for the last little while. Go to communist countries. So China is a really good example. China is probably the best example because we've seen a lot of Chinese capital come into Canada. China's homeownership rate is like 99%. Okay. Who are the people buying the pre-construction Evergrande and Country Garden pre-construction condos and causing a condo bubble in China's market in 2014, 15, and 16. It was on the cover of Maclean's called China was buying is buying Canada. And it explained how a lot of Chinese investors were coming and they were completely unfazed by price increases in Vancouver of 30% year over year in 2016 because in Shenzhen in 2015 the prices went up 16 to 70%. And that's a market where homeownership is at 99%. And so these market forces aren't isolated to purely investor or markets that are driven by investors, right? They can happen in markets where it's purely a homeownership driven market.
Well,
Um,
Dan, I mean, I think there, when we talk about the market, let's talk about the government's role. When that bubbled out of control, the Chinese government stepped in last year to prevent all sales of the market, to try
yeah,
and control potential collapse. So when we say the market does have government intervention. The market is
yeah.
not acting freely, not in
I wouldn't call
Canada,
China a
and
free market by any means.
no, and it's not acting freely in Canada either, is it?